It's been an interesting week. The second time in a row that interest rates will be hiked by the Central Bank of Nigeria's Monetary Policy Committee to a whopping 600 basis points within 1 month. And of course, for the first time in months, the Naira seems to be gaining grounds in the foreign exchange market. But as we say on this side, when prices go up, you know what that means. And so despite all the back-to-back good news, what is responsible for the high cost of food and other basics, we'll be finding that out for you in this episode of the program. My name is Leah Babatunde, welcoming you to the very first holiday weekend this year, 2024. Of course, it is Easter holidays today and Monday. And so what this means is that the financial markets are officially in holiday mode, but then we've got to bring you in the course of the program our complimentary segments, Simplified Ease and local commodity rates. Those markets don't go on break. The program is streaming on YouTube at Saban Media Services. We begin the business of the day with a look at the trends table.
One of the two Binance executives detained in Nigeria for alleged tax evasion and other offenses, Nadeem Anjarwalla, has reportedly escaped from custody. Online media platform Premium Times broke the news of the escape, which was later confirmed by the Office of the National Security Advisor. The February arrest came amidst efforts by the government to rein in speculation on the Naira by cracking down on cryptocurrency exchanges. The charges against Binance include non-payment of value-added tax, company income tax, failure to file tax returns, and complicity in aiding customers to evade taxes through its platform. The Federal Inland Revenue Service (FIRS) announced it had filed 4-count charges at the Federal High Court in Abuja against Binance. The second and third defendants in the suit are Tigran Gambayan and Nadeem Anjarwalla, both senior executives of Binance currently supposed to be under the custody of the Economic and Financial Crimes Commission (EFCC). Main1, a West African digital infrastructure service provider, says the time frame to repair the cut submarine cables affecting internet services in multiple jurisdictions is estimated to last up to 8 weeks. The company had said on March 15th that the repairs might take 1 to 2 weeks, but early this week issued a statement that states otherwise. Main1 also said there was stability in its network across the region, adding that it had worked with regional partners last week and over the weekend to reroute traffic with restoration capacity. National Insurance Commission (NICOM) says the sector recorded a milestone of 27% growth in the fourth quarter of 2023 to close at 1.003 trillion naira compared to 790 billion naira recorded in 2022. A breakdown of data by NICOM indicates that the non-life business accounted for 61.3% of all premiums written during the year, while the life segment contributed 38.7%, valued at 388.1 billion naira. The report further shows that the major growth drivers in the non-life segment of the market were oil and gas and fire insurances, contributing 27.3% and 24.1%. Statistics also shows that the market recorded total assets of about 2.67 trillion naira and capitalization of 851 billion naira in 2023. The Central Bank of Nigeria (CBN) has offered to sell $10,000 each to eligible Bureau de Change operators at the rate of 1,251 naira per dollar. The BDCs are to sell to eligible end users at the spread of not more than 1.5% above the purchase price. Dr. Hassan Mahmoud, Director Trade and Exchange Department of the Apex Bank, in a memo addressed to the President Association of Bureau de Change Operators of Nigeria, said it was the second tranche of FX sale to eligible BDCs. The regulator warned that any BDC that breaches the terms shall be sanctioned appropriately, including outright suspension from further participation in the sale. The Monetary Policy Committee (MPC) of the Central Bank of Nigeria (CBN) this week hiked the benchmark interest rate by 200 basis points to 24.75%. This was disclosed by the CBN Governor Yemi Kadoso after this month's meeting in Abuja. He announced the retention of liquidity ratio at 30% and cash reserve ratio CRR of deposit money banks at 45%, but the committee adjusted the CRR of merchant banks from 10% to 14%. The decisions are to rein in current inflationary trends fueled by food inflation and currently pegged at 31.7%.
We are very, very concerned that the purchasing power of the average Nigerian should be restored to the levels that they know it to be. And what we are saying is that going forward, we expect that if the environment is such that requires us to tighten, we will tighten. Our projections, however, indicate that things will begin to moderate from about May onwards. And the projection, as you may know, is that by the end of the year, we're expecting the inflationary rates to have come down significantly.
And to the business of the day, are you still wondering why food prices are high despite all the efforts governments and people and authorities seem to be making? Well, we have that conversation for you, what the policy steps regarding these issues mean. Professor Uche Uwaleke is the director of the Institute of Capital Market at the Nasarawa State University. He joins me to look at the government's policy direction targeted at price controls and other relevant issues. You're welcome, Professor, to this conversation.
Thanks so much, Leah.
Nice to have you here.
Yes. My pleasure being in your new and beautiful studio.
I'm grateful, sir. Yeah. Perhaps I start by asking you, basically, we've seen some very cheering news starting from the reduction in the exchange rate. I mean, that gap is shrinking. We're hearing also that good news is coming from the energy sector, particularly petrol and diesel. And a lot of Nigerians are saying we're not seeing it being reflected in the price of food, for instance.
Okay, well, it's something that will happen gradually. It may not be instantaneously. Just as you rightly pointed out, the Naira is strengthening, the exchange rate is coming down, and that's on the back of some of the policies of the central bank in recent time. If you cast your mind back, shortly after the unification of exchange rates, there was this devaluation of the Naira, and up until just recently, the Naira continued to tumble. But what did the central bank do? The central bank started by trying to instill confidence in the market, especially in the official segment of the market, through clearing backlogs, because that was very important. So the central bank ensured that a lot of valid claims, forex forwards, a lot of them, were cleared. So that had the effect of boosting confidence, in the market. And then you also realize that the central bank began to sell forex to qualified BDCs. That also had the effect of improving liquidity in the market, because it was essentially two things: the issue of liquidity and then the issue of pressure, demand pressure. The issue of rising food prices or rising prices generally, across commodities, it's not something the central bank alone, can tackle. It's something both the central bank and the government, must come together to deal with. And that's because aside from the issue of exchange rate, what we call exchange rate pass-through, because exchange rate is high, because you see that reflecting in prices. Yes, exchange rate has been coming down, but we have not seen any commensurate drop in general price level. Okay, and that's because of the lag, one should expect. We also realize that the central bank too has in recent time but also had been adjusting the exchange rate for cargo imports, adjusting them, downwards. Government has opened borders. Government has also been distributing grains. So I want to believe that all of these actions, in the near future, begin to manifest in a reduced general price level, reduced inflation rate, particularly the food component, which is what is even driving the inflation.
Some people would say that it's so easy for prices to go up, but difficult to come down. Why?
Naturally, yes. We often say prices are sticky downwards. Okay. Take the issue of interest rate, for example, and that's also why I'm not too comfortable with the what would appear to be an over-reliance on the MPR, as a tool to implement monetary policy, or as a tightening tool. This hike, especially when the hike is massive. All right. Usually, what happens is the central bank increases MPR. All right. What you find banks do, they immediately reprice their loans, write their customers and tell them, interest rates on your loan, has increased on account of increase in MPR, monetary policy rate. Okay. So banks do that very quickly. But anytime you find the central bank reducing MPR, okay, it takes a while before the banks will even respond. That is if they even do. Okay, so you find that prices are sticky downwards. So that's part of why it's sticky downwards. So you find exchange rate coming down today, for example. Even when you find prices coming down, they may not come down by a commensurate amount. So it's natural, especially when you have to deal with old stock. People talk about old stock. You have bought goods, say, at 1,000 naira, okay, and then for some reason, exchange rate has gone down, but you still have it in your stock. You have entered it in your books. Cost price 1,000, and maybe your policy is I sell at a margin of or a markup of 20%. In other words, you hope to sell it at 1,200 naira. That's what you're carrying in your books. So even when the exchange rate is coming down, okay, or some other factors, including maybe cost of production, is coming down, or energy, for example, is coming down, all right, you will still want to, sell that good you bought at 1,000. You still want to sell it at least above cost price. You're not going to reduce. So that's why you find that prices, tend to be sticky downwards.
Do these have implications for purchasing power?
Inflation reduces the purchasing power of people, and that's also why it's not difficult to see the link between inflation and poverty level. Because when you have rising inflation, purchasing power is reduced. What you used to buy for maybe 1,000 naira, if the price goes up to 2,000 naira, you can no longer get one of it. You can only get maybe half of it. All right. So your purchasing power has reduced, and that also reduces the amount of goods and services you can purchase to improve your welfare. So you now find that poverty level is increasing. So higher inflation rate is also linked to high rate of poverty. So it is one thing that not only affects purchasing power, also affects even on the part of whether individuals or firms, even investment disposition, or your willingness to invest will be tied to the inflation. If inflation is rising and what you want to invest in is not going to give you a return that will be higher than inflation rate, of course you wouldn't want to invest. Okay, the same thing with savings. You wouldn't want to go and put money in the bank, okay, and then wait and get 10% at the end of 1 year, when after 1 year inflation has eroded the entire thing. As of February last month, inflation rate has gone to as high as 31.7%, and the food component, which is where the challenge is close to 38%, 37.9, 38%. And this is a country where studies have shown that the ordinary man in the street, the average Nigerian spends over 90% of his income on food. So you can see that a lot of families, as we speak, are going through tough times because of rising inflation. So how does the central bank want to deal with it? The central bank is, thinks it can deal with it by further tightening policy and including through raising the monetary policy rate, which is what they have done. The last 1 month, monetary policy rate has been raised by 600 basis points. Okay, the first one in February, 400 basis points. They've added another 200 basis points, which is 600. Okay, now expectedly, all of that is meant to curb inflation. The only worry I have about that is that if you raise MPR, to a very high level, cost of funds will also rise. Access to credit is reduced. So if somebody is borrowing, someone that used to borrow at maybe 25%, the bank is now saying pay 30 or 30 something percent on the same loan. Of course, the
trickle-down effect.
Trickle-down effect. It will affect the cost of production. Okay, you find that firm, that businessman, attempting to also pass that on to the consumer. So at the end of the day, it may also result in what we call cost push inflation. All right. That is why I think I will advise the central bank, to use a mix of tools. Yes, MPR is there. There are also other tools the central bank can use to tackle inflation. But that's even talking about the side that the central bank can deal with.
Aside from the central bank, what will be the role of the fiscal authority? And as well, now you have mentioned the critical component, the business arm, and now the business community. What will be their role? Are they comfortable with pushing the responsibility to the end users or the consumers?
Of course, you don't expect a businessman is a businessman. What is the motive for? What's the motive that drives businesses? We often say it's profit, isn't that so? Yeah. So the rational businessman is not doesn't think in terms of morals, doesn't think in terms of patriotism. All he wants is to make profit. Okay, so he has bought something for 1,000. He needs to sell it at 1,000, 200. Apart from buying it at 1,000, suppose he borrowed money to buy it at 1,000 and is meant to pay 100 naira in interest on the 1,000. Now, if suddenly the interest he's supposed to pay on the 1,000 goes to 200, that means he's not going to sell it at 1,2 again. He will sell it at something higher than 1,2 to be able to cover not only the interest, but also have some profit, for himself or herself. So that's the expectation, for a typical, businessman, especially operating in a capitalist environment. You should expect that, and especially so where the business person is producing goods that are considered essential commodities. If the item in question is a luxury item, okay, he may not afford to pass that on to the consumer, because if he does that, demand will fall. But if it's an essential commodity, okay, you should expect that he will naturally pass it on to the final consumer. You have a situation in which, for example, the pump price of fuel is rising. Okay. By the way, I read somewhere today that NMPC, is or has plans that the pump price of fuel in their filling stations be reduced. That's a very good development, and that's one of the things that can also help to drive down, prices because of the power situation. A lot of businesses run on generator. Somebody said described it as Nigeria as a generator economy, and there's a study I saw that said that 40% of petrol consumption is generator, not necessarily cars. So we have a lot of energy issues, a lot of firms that rely on whether PMS or AGO, that's your diesel Okay, so the moment the price of these things are up, you should also expect cost of production to be up. This is about the only country that is producing oil, has this abundance, whether oil or gas, and yet we're importing, petroleum products. So energy cost is one. Electricity is also another. The government should also be working towards that, including through de-emphasizing this national grid. Okay, effort should be made, for example, to have, you can get the private sector to do that. I keep wondering, each time I walk into Wuse Market, so why can't we have a situation in which somebody can come in, a private sector person can come in, anybody that you want to operate in the market, you make arrangements to be paying something, by way of course, user fee to whoever is providing that facility. So the person can be given the, if you like, the right to run it for about 10 years, before handing over whatever to the, build, operate, and transfer, that sort of thing. Then there is also the issue of insecurity. Okay, it's the government that will deal with insecurity, it's not the central bank. Okay, today you can see a spate of kidnapping, and because of the insecurity, a lot of farmers are not on their, in their farms, and this is a country now over 900,000, square kilometers. So we need to deal with insecurity so that farmers can go to farms. That way, the food output will increase. If you also fix transport issues, for example, our roads, you also reduce the cost of most of these items. That's the best way to deal with inflation on a sustainable basis. This issue of MPR is just temporary, all right? So even if you succeed in reducing inflation using the MPR today, if these other factors are not fixed, you still find the same problem will rear its, ugly head.
All right, I must sincerely thank you for making our time for this conversation, and as always, throwing light to issues that are beneficial to the general well-being of the public.
Thank you so much, Leah. My pleasure.
My name is Aldumi Kori.
Keep watching The Policy with Leah.
It aims to provide policymakers an opportunity to explain their policies in a way that members of the public affected by those policies can understand and engage with those policies.
Keep watching The Policy with Leah.
Do you know what is a credit guarantee and how, when, where you will be needing that one? Well, let's simplify that for you, and from there we'll take you to the local commodity market. For more on rates from markets across the country, do well to log on to our sister website. It is www.marketnigertv.com. We have all the details for you there. And don't forget, the Policy with Leah is available on YouTube at Saban Media Services. So do follow, subscribe, and of course, send in your feedback because we value them to serve you better. Our social media platforms are open to you as well. Do communicate with us over there. We'll return your way again same time next week. Don't forget, building Nigeria is a duty for every citizen. So play your part. Have a beautiful holiday season and God bless Nigeria. Be safe out there.